Hey guys, welcome back to our another episode here at the Traders Show, episode 16. And today I'm here with my partners Ken and Taras Lawi on my right. And today we have an interesting topic, always an interesting topic. And today we are going to talk about trading mentors and developing discipline to become a successful trader. But before we start, Ken, how are you? How's your week trading wise?
I'm good. I'm doing well. This week, taken I think 2 or 3 trades. One was a loser, 2 were winners. Or rather 2 were losers, 1 was a winner. So not much has been happening in markets from the markets I watch. I think most markets that I watch haven't had any major moves for this week. Today's on Friday. So I'm keen on what will happen on markets next week. I think much of my time has been spent doing backtesting and solidifying some things in the system, looking at my journal, trying to come up with a better framework for looking at markets. That is what I think I've spent much of my time doing this week, trading wise. Nothing else, and researching about cryptos and what's happening in that space. So that's what I've been working on from my end.
Good stuff.
Ken. For me, my week has been... Actually, today has been a good day. Already it started pretty good. Had some pound yen and pound longs worked really good. So a few percentages up on that, about 2.7%. So it's a good week. I had a Nasdaq loss on Tuesday, I think, but that has been covered up. So I can say it's been a good week. Currently I'm running S&P 500 shots. So a bit also like not so much momentum on it. Slow trade for the week. It hasn't moved so much from my entry, so I'm just still sitting on that. Maybe I'll ride it to next week until I see the outcome. So that from markets, nothing much on my end. Just today morning, got some good trades, acted on them, and they worked really well. Immediately London Open came, so that has been my trading week. Today, as Caleb has said, we're going to talk about mentors and trading discipline and how we can develop more discipline and actually what we've learned from the different mentors we have. So I think Caleb will start on that. He has prepared a lot on that, so let him kick us off.
Well, before we go there, for me, my trading week has also been fine. Learning and no trade taken. But one thing that's for sure, and I think all of you agree with this, it's much more expensive to miss a trading opportunity than to take a loss.
Yeah, true.
What do you think about that?
Because a loss is, okay, in terms of risk reward, your loss,
exactly.
Yeah, of course. Missing that win is more dangerous than having that small, let's say a 0.5 loss and missing, let's say a 2% win. See?
Exactly. Because if you lose with the way we're risking less than 1%.
Less than 1%.
So if you miss a trading opportunity that you
which has a risk, like your trade, maybe it has a risk reward of 1:4.
1:4.
So if you risk 0.5, you'll get, let's say 3% on that
exactly.
trade. So missing 3% for negative 0.5 is, as you say, it's more painful. It shouldn't be stomach in trading.
So with that said, what I was talking about, there's a trade on, I've been following a trade on oil which has really rallied, and I didn't get an opportunity to enter, but I'll still be watching it. And it's gone like the wind. But anyway.
That trade you're talking about.
Hey, remember those following it from last week? It's gone.
How did you miss it?
Monday morning it started.
This trade.
Oh, I remember.
It started.
Yeah.
Went.
I also had a potential entry on oil, but it didn't give me that entry. And okay, for me, it was a pretty short trade, like about 80 pips.
I was looking. This thing is up about 500.
Yeah,
pips.
It's up a lot of percentages from that low. Yeah.
That Monday. So I had this analogy, like Monday started with Ken in the office. I told him this trade. He knew I was waiting for it. It's like, have you entered? I'm like,
it's
not yet.
Waiting for
like,
Godot.
I'm like, this market has started with a lot of momentum. Let me wait and see how the day progresses, if they get any correction. Because it started Monday, it hasn't really corrected. You've seen it, yeah?
Like most markets actually rallied instantly.
Boom. So I was waiting for that close, trying to see that support level is going close. If we'll get any pin bar, nothing. That was a bullish. It was 6% up.
6% up move
that day. So landing to miss trading opportunities, man, it's much more expensive because you'll just lose 0.5 or 1%. But anyway, that's my trading week. But let's get into today's topic. And as we said, trading mentors. We'll start with trading mentors, then we can enter into discipline, then we can conclude. Yeah. So just starting off, who is a mentor? A mentor is an experienced and a trusted advisor. So whenever you're going to seek a mentor, you're going to look for someone who's experienced in that field that you're looking for, and also you trust them. Okay. So those two things must go together. That's not a personal explanation. That's from Google. So if you just search Google who's a mentor, that's what you'll get. And a mentee. If you're looking for a mentor, just know you're going to be a mentee. A mentee is a person who's advised, trained, and counseled by a mentor. So that's what it is. So whenever you're looking for a mentor, look for someone experienced and someone advised, trusted. So starting off, while I was doing my research, personally, this is just a personal view with what we've been experiencing ourselves for the past almost 4 or 5 years of us trading. I believe we've experienced 3 types of traders. I don't know if it's an actual thing, but personally,
traders or mentors.
Mentors.
Okay.
I said traders, yeah? Sorry, mentors. Book mentors who've influenced us a lot, online mentors, and physical mentors. So book mentors, I believe, is the people you go read. Let's say you're looking, same field you're talking about, same field. It can be other fields, but mostly in the same field. So let's say you're going to trading books, you're looking for traders, mentors who have been experienced and doing it 20, 30 years plus. When you come to online mentors, this I think people you find on YouTube, guys who do articles, so you learn from them. And then physical mentors, the people you have one-on-one relationship with,
hang out around,
which we have not experienced that much ourselves, but we are starting to get some of them. But starting off, book mentors. So I don't know if you guys will have anything on this one. I have a lot. I have Jesse Livermore. I have Mark Douglas. Jack Swagger. Is it Swagger or Schwager?
Schwager.
You sure?
Swagger.
Jack Schwager, the author of Market Wizards.
Schwager.
Actually, here's one of the books. It's good you have it as well. Market Wizards. There are a lot. There are about 4 or 5 of them. And he introduced me to like most professional traders, great traders, and person who stood out was Ed Seykota for me.
Ed Seykota.
He once said, I don't know if you guys remember this, but it was quite funny. Ed Seykota is a trader who, in the mid 1988, one of his customer accounts, which started with $5,000 in 1972, was up 250,000%.
Wow.
On a cash basis.
2,000.
Get that right.
250,000%. In how long? 1972
to 1988. About
16 years. Yeah.
That's a lot. Even if you take it by year, if you bring it down on average. So he once said, he was asked by Ed Seykota is just a funny philosopher trader. What is the most important advice you can give to the average trader? That he should find a superior trader to do his trading for him and then go find something he really loves to do.
Just don't do it.
Don't do it. It's tough.
Yeah.
It's challenging. But anyway, what do you guys have? Any book mentors?
Yeah, of course. I think for all of us in the office,
But wait, do you agree with the fact that you can get mentors of books?
Yeah, of course. Like someone you just go for. I believe trading is something you can learn way better from other people's mistake if you actually put yourself in their shoes at that moment. Mm-hmm. But if you read it as a novel, you won't really feel the pain. Because for me, like reading Market Wizards, there was like the story of Jesse Livermore.
Yeah.
Like their stories were painful. Like losing $100 million in 1930. That was painful. You see, but if you read as a novel, you won't really feel it. But for me as a trader, I want to put myself in his shoes because that's where I want to be in a few years, managing $100 million, $1 billion. So I have to put myself in that space as I read the book, and you actually get like he or she will influence, like as you said, like mentor someone, like he'll advise you whether you want it or not.
Yeah.
Like the fact that you're reading it, you'll just pick those nuggets, like mistakes he did, the good things he did, and from that I think he or she becomes your mentor. So I believe in book mentors, and I have a couple of them also. From reading Market Wizards, for me one of them is Just a Livermore, The Reminiscence of a Stock Operator by Edwin Lafevre or something. Yeah, so that book really, and I remember I bought the book with Ken in town for about 800 bob. But that book is like timeless. That book is about a century old, actually more than a century old right now.
When was it?
Early
1900s?
Yeah, early 1900s. Because Livermore made his first money around 1907 crash. So like the book is over, like trading nuggets from 100 years ago,
Which still work today.
which still work until today. So you can't really say that, okay, in as much as trading needs you to be an independent thinker, create your own stuff and make it work for yourself. I believe there's some ground principles that work for everyone across the board. Things like risk management and psychology. You can't cheat on that. Like all traders are struggling with that, and you have to take time to develop that like on your own. So, and learn, like reading books, you see the stories of how these people went through their risk management tragedies and their psychological challenges. So you pick a lot from you pick a lot from the books. So for me,
I think for Livermore is the one who had most swings.
Yeah, Livermore had like
blowing
3 swings.
accounts,
Yeah, like from the first time he was in New York, losing that, I think it was $10,000.
Yeah.
Then the second time he lost $3 million. Then he lost another $100 million. Then he finally killed himself. So it's an interesting story. You guys should read the
Don't
book.
kill yourself.
Reminiscence of a Stock Operator. Really shows you like the true picture of like what trading was at that moment. And I think it still is at like until today. Like there is no much that you can't lose in the markets. There's no much that you can't lose in the markets. Like you can lose literally everything.
Yeah.
So also those stories of how people went from riches back to rags also really gives you a perspective on how you should like now handle your trading going forward. So I believe mentors are great in trading. You need to have a mentor for you to like avoid some mistakes. Some mistakes in trading. You learn a lot by your own mistakes, but you will save more money and more pain by learning from other people's mistakes also. So I believe having mentors is great. There are books mentors, as you said, online mentors. For me, book mentors also, Principles, the book by Ray Dalio. Great book in terms of work and also in terms of trading. So also I have people outside trading, also people like Serena Williams. See, Serena Williams also has been like she shows me how like tennis is more sort of like trading in that it's one-on-one game. It's not like there's no team.
So basically here now you're talking of online mentors. This is basically online.
Yeah, still online, because I've not met her.
And you've not read her book?
Yeah. Okay, I also not read her book. But the fact that she's excelled so much in a sport that does not have a team really shows you the power of that you can actually make it as an independent.
Tennis is like that, yeah?
Yeah, you don't have a team. You only have a coach.
It's just you and the coach.
Yeah, so like that factor that you actually need to perform like without a team on your own, like in solitude, that thing also shows me that you can also do that in trading, because trading needs you to like work as a team at times, but have a very, very independent decision-making strategy. So
yeah, I
think that and I think also Serena Williams also says this about losing. Like she doesn't, because tennis, I think there's the like how is it called? I think I forgot the name. The hits. So if you miss a hit, for her it doesn't really matter. It matters in like 100 hits, not in one hit. So also that thing also showed me that you need to have a very, very like, don't focus on the short term, focus on the long term, focus on a number of probable outcomes in trading also. So don't always focus on like making your current trade a winner. So that is, I think, what I've picked from some mentors. Ken?
I think for me, just referring to some of the things that Caleb has talked about. First of all, I think I learned this from Ralph Waldo. If you meet a man of rare intellect, you should ask him what books he reads. And I think over the years, as I've been reading the books, I think over the last 5 years, I've read so many books and I've met very many people. And one thing I learned was most of these people were influenced by other great people, in that it was like a generational thing that happened, whereby some intellectuals influenced other intellectuals, which led to other intellectuals. Like if you look at the Scottish Enlightenment, how all these people influenced each other to the point of having some people who did some influential work, the likes of Adam Smith, the likes of Karl Marx. All these people were influenced by each other. So it was more of a mutual relationship. Mm-hmm. I think the same exists in trading, in that if you look at some of the greatest traders, for example, Ray Dalio was influenced by Bernard Baruch. Mm-hmm. I think that is clear in the book Principles. So Buffett by Ben Graham. So I think there's a very high correlation between the people who influence your trading and how you look at markets actually. And one man said, when you read a book, you don't meet anyone else, you just meet a part of your character. Mm-hmm. I feel like if you relate to a trader, there's a part of your character that makes you want to relate to that person, the way that person looks at markets. So I have a couple also. I've looked at Jack Swagger. I think is one of the people who has influenced me in markets. I have Van Tap on the trading psychology scene. I have Dr. Brett on that scene. I have Ray Dalio also on my watch list, one of the people I tend to go back to their works to look at. I have Charlie Munger, the vice chairman of Warren Buffett. So I have a couple of people. I have a whole list of people who've really influenced how I look at markets from that perspective. Mm-hmm. And unlike many people, I don't read a book and then place it back on the bookshelf. I tend to look at a bookshelf like a working tool. What I mean is I tend to go back to a book I've read. I think I've read some books even 2 or 3 times. And I think one thing I've also learned is you don't need a big library. What you need is a small library, but to be able to absorb the works that these people have written. Because anytime you read a book, you bypass very many things which are important. Mm-hmm. But the more you keep on repeating it, the better you grasp the content of the book, the context.
So you advise on little more books, go deeper than reading a lot.
Yeah. And over there,
especially if you're reading like a certain author, at least get
deeper
all the books.
Exactly.
Go deep.
Go deep into it. Because like for me, I read 3 or 4 books at a go. And on the 3 or 4 books that I'm reading, you may find that 2 of them are books I'm repeating. Mm-hmm. So it's easy for me to skim, to go into areas where I'm looking at, to get connections between things. And it's easier for me to understand some of the things when I'm just going through a book that way. So I think it's important for a trader. If you're a trader, especially, trading is all about information. I think information gives you an edge. Understanding historically how markets have performed, like looking at the book Global Macro Trading. Yeah. That tells you a lot about how markets have performed in different environments. And I think it's important for every trader to ensure they understand the works of history before they can even start trading live money. If you don't have some of these things on your fingertip, then you'll keep on repeating the same mistakes and there's nothing new under the sun, only what you have not seen. So I think it's important for people to go back to that other side. But as we get to a close, I think I'll turn again into a pessimist and try to show you why also some of these things are also dangerous, like following the mentors, but I don't think that's for now. I'll turn into that some other time after we're done with the optimism on that side.
Okay. So any book mentor who stood out?
Particularly for me?
Yeah.
A book which stood out in the context of the markets?
Yeah, in context of the markets.
I think Jack Swagger has some very, very good works. Reminiscence is also a piece of art. I think you should also look into the works of Van Tap. I think Dr. Brett should also be on your watch list. Brett should also, like there are I think 10 authors who you should ensure you study. Howard Marks.
Mm-hmm. Yeah.
So
Mark Douglas. If you've not studied some of these men and understood their works, it's hard to survive in the market. It's very, very hard. Yeah. Because at least from reading Market Wizards, what I've learned is the curve of learning how to trade. Like the learning how to trade. For all traders.
Yeah.
Like
there's a common
pattern. In the early 3 to 5 years, they lost money.
Struggling.
struggling. It was like frustration.
So when you're
pain,
reading that was sort of mentoring you to understand the
the
fact
process,
that
exactly.
I'm not alone.
Yeah,
you're not
you're not
alone.
alone. You're not dumb.
yeah,
You'll
it's part of the
eventually
process.
Exactly. So
Because it
think-
paid off massively for
Massively,
Yeah,
all
most
those
of
people.
them, yeah.
The market
Because if
wizards,
you're
most of
in the
them,
market wizard, of course it paid
billionaires.
off.
Yeah.
Hey, billionaires.
So,
Yeah, some are billionaires.
exactly. So I think that is one that I'd recommend for everyone. And again, the good thing about the book is there are very many people you meet,
Yeah,
Mhm.
true.
and
it's
people
like-
from different backgrounds, different stories, different struggles.
It's
Then
actually
the fact that he has like a series of those
Exactly. And
market
then he has
wizard
a
books.
series of books.
Yeah.
So there's a lot about Jack.
There's the
we
hedge
should-
fund market wizards. There's
Unknown,
new market
unknown,
wizards,
new
unknown market wizards.
There's this little
Yeah.
the
one.
original one.
So I think
And I
that
think it's
is
the easiest way
to learn.
because I think one thing about book mentors and like physical mentors, it's sort of more trusted.
Meaning
Physical, you don't know, like what they've said about
the
if you
good-
read the definition of mentors, experienced and trusted.
Mhm.
So yes, you can get someone's experience, but you don't know if they're trusted. But if you get a book, it's much more easier to know that this is like Jack Schwager. He's already done for you that whole process
Yeah,
because he
true.
only interviews people who have a good track record
Mhm.
and they've been in the market for some time.
Exactly.
So you can trust that person is knowing.
He knows what
he'll
they're
tell
doing.
you is actually
The truth,
works,
yeah.
makes sense.
Oh, yeah.
You get. So I think books also help you that. So I don't think you can escape the part for
And I
reading
think,
when it comes to mentors.
Also, that shows you like in terms of the amount of content, like the amount of trading books written out here, the amount of content of books in financial markets, options, bonds, trading stocks, how I made $1 million trading stocks, a template for understanding the forex market.
it,
Like there's a million books in
Team
forex.
Sykes.
Yeah, like so, like just it shows you about like how much people have written about this industry.
Yeah.
And also it gives you a perspective of experience because without reading you won't like reading a book is like cheating experience.
Yes.
How?
Yeah, like you want
Because I was
to
thinking about it, like
Yeah,
he's
Cheating.
saying.
Mhm.
Yeah.
Like
Just expand.
like cheating experience in that like you've not gone like literally through what the person went through, but
But-
you've learned
Oh,
like
okay.
from his mistakes and from his successes. So you
Okay.
see,
Because
Okay.
you can imagine like reading principles.
Mhm.
Like I was just thinking about it. This is someone who spent 30 years,
exactly.
More 40.
yeah,
40.
trying to understand how to build a company, how to build the right culture, how to trade well, how to organize people to trade well, how to manage a group of traders.
Yeah.
And then he does for you a 600-page book,
Mhm.
which you can read in less than a week or even in a month.
Yeah.
And you assimilate 30 years of experience. I
Imagine.
think there's a lot of value
It's
in
too
that.
much
There's
value.
a lot. You can't equate that to the 30 years experience learning or trying to craft your own things.
Yeah,
Because I
true.
think there's things where you need to think from first principles, like you don't want to learn from anyone. But there's some certain things where it's a better bet to model.
Mhm.
Like when it comes to trading, I feel like there's some parts where it's right for you to learn first principles, like developing your own methodology. But when it comes to the area of psychology of trading, there's a high chance you'll be emotional, you'll tend to hope, you'll tend to move to greed. So why not learn from people who've learned how to handle these things in a better way? Why struggle really trying to invent something in that light? I don't think there's any
Yeah.
value in trying to invent some things in some lights.
True.
It's like building a business. I'd rather copy a successful business than try to invent that business yangu itawa kivi
Yeah. True.
from some principles. Yeah, it's
And
better
actually,
to relate.
Apitatil talks about that. Like right now, there's so little you can invent.
Exactly.
You can only learn from people and
People.
like improve.
Improve. Yeah.
So, like, I don't think personally since I came into trading, I've invented anything.
Nothing.
Nothing.
Nothing. There's
Nothing, eh?
nothing. to
Nothing
be
I've invented. So I've just improved on people's experiences, my own experiences.
Yeah.
Yeah. So I think experience also from other people is very, very important. And as I was saying, as it started, that in trading, most times you'll find that most mentors were mentored.
Yep.
Like most great traders were mentored, and I think that's where we also come in from a small scale perspective. We are not that level of market wizards yet, but I believe we've mentored a lot of people.
So we're
just
getting there.
yet. Yeah, just yet.
Good point.
Yeah, but we've mentored a lot of people in the office, our students. This podcast, a lot of people say they take notes from this.
Yeah.
Yeah, like they come here, take nuggets, and it maybe helps them one part of their trading or another. And I think like you can learn from like you like in trading you can learn from like life, and like it doesn't have like you don't have to learn just from Ray Dalio. You see, you can learn like being like humility can like things like humility doesn't have to come from markets. Like you can just learn such stuffs from other life endeavors. So also the fact that like your trading has to be like your life and your trading behavior and how do I put it, behavior and let's say character has to be one that fits that of a trader, in that you'll have to learn a lot of things also from life, not just from other traders' experiences. So like in humility. So for me, I believe for you to be a good trader, you have to be very, very humble. So that comes from one, markets will humble you, and two, if you the character of a trader is that you're working in a field that rewards you with money, and money comes with deceit and a lot of cheeky behaviors. We're talking with Ken about that. Like if you get like a wealthy person who is straight in his works, straight in his dealings,
morals.
Yeah, in his morals.
Like it's
that
hard
person,
to get a rich Kenyan who has straight morals.
Yeah, straight morals.
Like ni hard.
Yeah,
it's hard.
Ni hard sana.
So
and
like,
that's what I'm telling you now in terms of trusting.
Yeah.
A mentor. You're going to someone who's okay, yes. Because you're not just looking.
He doesn't have morals.
You should have criteria for looking for mentor, not just someone who has money.
Yep.
Yeah,
in
true,
the same field as you. That doesn't guarantee.
I think that's where
that.
most people get trapped in this scammy deals.
Exactly.
Yeah, you trust someone with money. Okay, you trust someone with money, but he didn't have the trust. You see.
So exactly, good point.
Exactly. So like your mentor was not actually a mentor. He was a con artist. Yeah. So I was also saying like from trading, like life can also be your own mentor. Like life should teach you.
Life mentor.
Yeah, life should mentor you also to become generally a good person in
but
in
if
life.
You're talking about life, man. Life will mentor you a lot of things.
Yeah, a lot of things, man. Yeah, true.
A lot in all fields. That is.
Yeah, in all fields. Like it's so like life, because like I believe everyone had their own like parts of life where they were down, they were up. Like life is a pendulum, always swinging from left to right.
But you know, there are people who don't learn from such experiences.
Yeah, they are there.
They keep repeating it over.
Yeah, exactly.
And that's why I think it's good enough to also be humble, what you're talking about, to listen to other people's
Exactly, yeah.
Because they'll bring different things to the table. It doesn't have to be necessarily what you went through, but you can learn from them. Like, look what we had in the previous podcast, Francis coming to share with us his ideas. You get to learn a lot of stories
true.
and how you can trade just from him. When we normally have Gitosh talking to Gitosh, you learn a lot.
From a 30 minutes, 1 hour session, you've picked a lot of stuff.
A lot that you'd never have picked up. And imagine, just 1 hour.
Yeah.
This guy's told you all that. But this, I might believe in mentors, because another analogy you can use in terms of mentors. You remember that thing? I think I had this a while back from, so I have to give credit to its due. Ken, this guy who talks about money a lot, his adverts keep coming a lot.
Tai
Lopez. Remember when he said getting a mentor is like getting a compass. So let's say, for example, I'm here in Kenya and I want to go to North Pole. Okay? So if I want to go to North Pole, there are two ways I can use. I can go south and go round all the way till I reach North Pole. Yeah, but when and that time I don't have a compass, I'll still reach. But if I have a compass, which is now a mentor, he'll shorten all that time and tell you, don't go this way, go straight like this. Like they're showing you the way, which they've shortened that, what you're saying, cheating experience.
Cheating experience,
exactly. Yeah. But also, there's a lot of advantage of the experience part. The person, yes, you can cheat. Personally, may believe you don't have to, but going that down route is very nice. Like what else we've gone through. You see what we've gone through, we've learned a lot such that we'll teach other people. But those people not experiencing that sort of have a disadvantage then.
Yeah, true.
The people who have gone through it.
Actually, for us, as we started trading, we didn't have a lot of physical mentors.
We didn't have
every day. I mean, in the office,
not,
I'm talking to 2 or 3 traders every 2 or 3 days. So I think,
because you see, for you, it's deeply ingrained. Like what's done. The guy for being supernatural, what's his name? Joe Dispenza. He says what? Emotions are the end products of experience. Yeah? So having gone through that, you have a certain emotion attached to a certain experience, like the blowing account, the oil trade,
the oil trade,
or whatever.
Something I'll never
or
forget.
these things you'll never forget. Yes, you'll tell someone else. They listen from you. They can learn from it. But it's easy to find that person doing such a mistake.
Yeah,
unlike you. That's what I'm saying.
Me, I blew an account after reading Jesse Livermore. You see, so as you say, like experience also is the best teacher, but learning from others also saves you time.
It does,
Yeah,
but nothing beats experience.
Yeah, I agree with you.
It's
Nothing beats
just
experience.
that you have a better advantage.
Even if it takes more time, you'll still maybe you'll still just get to the where you are going, but it will take you a longer time. Which if time is, if you are a patient person, which trading needs you to be patient, you'll still get there. So, but for me, I think time is also of essence.
Time is of essence.
Yeah, so if you can find the best way to find a mentor in trading, just do it. Just do it.
You have no option. Do it. You have to do it.
So mentorship. Also, like as Caleb was saying, like try and do due diligence on who is trying to be your mentor. Also,
man, that thing is important.
Yeah, that is very, very important.
You might waste a lot more time thinking you've gotten a mentor
and getting a bad skill that will take you even longer time to unlearn it. You see,
you can be mentored into a bad skill.
Hey, bro, I'm not sure. People who are being mentored into like let's say. For us, I think we have like solid mentors. There are some people who they are mentors. Me, like I meet new traders, and they're always telling me about like these South African people. You see,
or the online mentors.
Yeah, the online mentors, which are actually
the gurus.
Yeah, the gurus. I believe that is the wrong path to take. If you actually want to form a solid experience in career in trading, you need to learn from the best. You see, like pick only like what is helpful to you, not a lifestyle. You see, don't pick a lifestyle. Pick someone who has philosophies, ideas.
Picking lifestyle as a mentor.
Yes, actually, like most people go into that side. Like someone, like me, I don't think if someone has been mentored by a poor person. Most people go for the rich person, right?
Of course.
So but now currently with social media and all that, there are very many people faking that. Like I'm a rich person lifestyle. I'm experiencing this, and he or she will maybe charge you a lot to mentor you, and he's mentoring you into a wrong signal providing. You see,
and we've had many of these people, like what you're saying. They come to the office, they say they wasted time.
Man, exactly. Trying to learn from signals, trying to learn from like
and even learn from signals. You'll just learn what not to do.
what not to do. Maybe learn to quit it. That will be the best lesson in terms of signals.
Never to do it.
Yeah, just never do it. So I think mentorship for me is something you can't do without. Like in all aspects of life, not just trading. You need to have someone guiding you, even though you won't like solely follow this person. You just pick a few things here or there. Also for me, like in the office when I'm teaching what I teach, I let the person have an open mind to what he or she will pick also. So like I'm not telling you this is what works and follow it. I'm just telling you how I do my own thing. If you like it and
so you're teaching them to become learners.
Yeah, to become learners
from
so be open kabisa. Mimi mwambia mtu tu, you learn from me. This is my first class. There's Ken and Caleb, they'll teach you that. If you pick any of that, it's very, very fine. You see, so like also like in terms of, for me also, because I believe I've been a mentor to some people. Like you can't make someone become like you. So
you're helping them.
Yeah, just help them find themselves.
Okay,
exactly. So for me, I think
that's the thing mentors should be pushing towards.
Yeah, should be pushing towards, and also like all of us, maybe in the education space of forex, that should be what we should be pushing for. Like helping the next person coming to you become a better self, like a better version of themselves. So that will really, really like change the whole. Because I believe that like the education sector for us is basically mentorship.
The what sector?
Education sector.
Yeah.
It's basically mentorship. Because I don't think you can actually teach someone how to be a successful trader. You can just mentor them here and there. So like that sessions we have in the office is basically just mentoring you in terms of technical analysis, risk management, psychology, basically trading lifestyle, all that. So I believe personally I've also been a mentor, and from my own perspective, as I've said, it's more of not trying to make a copycat of yourself or not trying to force your ideologies and philosophies on someone. I also like getting so much from the people I teach, like trying to see their own views of life, their own perspective of how they approach markets.
Which is part of being humble.
Yeah, which is part of it, exactly.
You're
listening to them also. So like it's something that in the trading space, in terms of physical, especially here in Kenya, it's starting up, and I think we are the ones, and maybe other competitors, 2 or 3, now trying to mentor these young traders. People who are finishing high school, people who are finishing campus, people who are still in campus. So we won't give you, like, we don't have success stories yet, which for me, I believe that is like, you shouldn't just like go for success stories in terms of mentorship. Like go for also, like, for me also, I think my failure stories helps a lot of people when they come to the office. Like they learn a lot from my failures. So, and I'm not even
which
yet.
Which is more important.
Yeah, exactly. Which is more
learn
important.
From
people learn from failures, and that's what Ray Dalio says.
Because if you talk about winners, people don't relate with it.
Yeah, people don't relate
if
with it.
If you talk about failures, now someone, okay, I have gone through that.
Let me know. And
how did you conquer it?
Yeah, exactly. How did you conquer it to where you are now? So I think, and as Ray Dalio says, who I think we've all mentioned him as one of the greatest mentors we've had, is learn by failing well. So like failure is the best place you learn, not by.
Why are you laughing, Ken? What's right?
Fail well.
Yeah, just learn by failing well.
What's failing well, Taras?
I think failing well is
Okay, what is failing well? You're the one who's laughing. What's failing well?
Failing well or struggling well is Carl Jung. Let me just bring in another person to this. So Carl Jung normally says the fool is the precursor to the savior. What he means is, as you start out on something, there's a very, very high chance you don't know how to do it.
When you're starting out.
And so you'll fail. And that's failing well, because you're pursuing something that you don't know how to do. But now from your failure, you can learn what works and what doesn't work. And once you learn what works and what doesn't work, and you do it again, you can succeed now. You get? So once you succeed now, initially you're a fool. When you started out. But now because you're doing something and you're succeeding at it, you're a savior, because you're doing it well. So you can save people. So failing well to me means pursuing things which are out of reach, out of your scope, with the chances that you'll fail. But you learn from your failures and then you move on to the next step. So it's more of a feedback loop where you used to
a spiral,
yeah,
upward spiral.
Exactly, climb higher all the way to the
that makes sense. Yeah,
that's how I think about it.
So what was funny? Have you failed well yourself?
Yeah, and I think I wanted to say that.
It's normally funny when you tell someone
failed well.
Yeah,
see, we also started saying that the day. Fail well. Now, because you have a couple now, fail well, struggle well, lose well, which we got the other day. Lose well, struggle well.
And like losing well is losing when you have planned. Like
like a planned
some
loss.
losses.
It didn't just come. It wasn't unexpected.
So that's losing well.
Losing well. Struggle well. Life is a struggle, but struggle well.
Yeah,
choose your struggle.
Have constructive stress.
Yeah,
stress yako isikue tena ati sijui ndaimpress aje watu ndafanya
exactly.
Have constructive stress. How can I improve something? How can I be good at something? How can I improve
exactly
myself?
And that's a good point, because these days you always meet everyone, hey man, niko na stress, I have stress, but if you're having constructive stress,
that's fine.
It's building you, like it's really shaping you to become a better person, which is good. And trading is doing that every single day. So you don't have stress yet. Stress, no more na kichwa, I can't think, I just need a rest. No, constructive, like, okay, there's this problem,
I need to
find a solution. It's a good problem.
So the struggle to develop a skill. That's struggling well, because
struggling builds character, bro. Struggle, a good struggle. It's just like what they say, pressure makes diamonds.
Yeah, true.
Good struggle, man.
I've seen that.
You've seen that?
Like hot water.
And you subdue, what's the precursor to diamond? What comes before diamond?
Let me not lie to you.
Titanium. I don't know. I don't know.
When you heat it well, under pressure and heat, that's when you get the diamond. Like diamond doesn't come out of.
Yeah, but also there's that for like an egg. But that I think comes from perspective. Like it says, potatoes get soft in hot water, but eggs get harder in hot water.
Hot
You say
water.
like an egg can get like a boiled egg is solid,
Yeah.
but it was in hot water,
Mhm.
but it managed to solidify.
Okay.
But a potato will
Became
get
tough.
softer. Yeah,
Became tougher.
exactly. So it's something.
So does that
in
also
line.
deal with what you're saying? Choose your struggle.
I think so.
Cause
Mm-hmm.
thinking of it with what you're saying, I'm
Mm-hmm.
trying to put some analogy on it. Like the potato, is it a good thing that happened to the potato? It becoming soft or bad?
I think this is a perspective of like an experience you're going through. You see, let's say if you're going through a bad time,
Yeah.
Be an egg, don't be a
like
potato.
yeah, exactly. Like be optimistic. Like, just think hata kama like even if it's tough,
Mm-hmm.
I'll come out as an egg. No.
Okay. Not a potato.
Not a potato.
Okay.
So yeah,
Okay.
that's a
That's
philosophy for another day.
it's a good analogy. Good analogy.
Yeah, I think
But-
for now,
But the fail well, I think that stands out for all of us because we'll all fail. And what they also say, fail forward.
But also I have some strong opinions on it once it comes to some of these things.
Like
Because I
what?
feel like people are preaching, especially in our generation,
Yeah.
like we have overrated failure. Nah.
Share with us.
To make it so okay to fail. Like
Mm-hmm.
it's okay, you can pivot, you can. So people no longer have that urge to succeed from like day one. Like okay, there's that failure.
now that is not failing well.
exactly.
If you're not failing to succeed, yes, you failed well.
Exactly. Because you know,
like I don't know.
That's what I'm saying.
Come on, like pivoting is something nowadays. Nambo, you can pivot, you can start all over again. Sasa mkija
You'll
trading,
make it.
imekuwa ngumu, I can start all over again. I can do something else. Imekuwa ngumu, I can do something else. You find yourself jumping from 3, 4, 5 careers, not settling in any because you're looking for what's easy or what you'll hack very fast. Because you've accepted failing like is part of life. But if you've not accepted failing, trading ikuwa ngumu unapambana mpaka ishike line. Haiko at sijui na 1, 2, 3 I'll do ABC. Once you start having that mindset, I feel like there's a very fine line between failing well and the
failure.
overrated failure ile ya you can pivot.
Exactly.
So,
That's why you're preaching here to fail well.
how can
yani,
someone know they're failing well?
that's a hard
Especially one
That's a
like
hard one.
see. Me, I think I can say it.
Also
One,
me.
exactly. Are you learning from your failures? That's one. Like if you see that person who was hopping from career to career was not learning was not trying to look for the root cause of why he was failing.
Exactly,
Why he or
that's
she was
one.
failing. You see,
So they're just carrying the same problems to the next place.
nothing will change. So I think looking for the root cause of why you're failing actually will be the first step for you, like to pivot to
well.
success. So let's say you're in a losing streak. Just an example, and you don't want to dig deep into why you're in this a losing streak. If you just sit down and analyze your trades, you'll realize one.
There's a pattern.
Yeah, maybe I'm over trading. This was on a Monday. I had Nasdaq, Pound, GJ,
Same day.
EJ,
Crazy risk.
gold, oil. You see, so
all those-
for you lose on that Monday. Tomorrow is another trading day.
You're just like, this is normal. We
Yeah.
have to fail.
That's how you've
now that's
gotten
not good.
That's not good.
That's not
Exactly.
good
That's
failure.
not good failure.
Today I've just lost. It's tomorrow, same thing. I get your point. That's not failing
The
well.
only way
Exactly.
you learn from your failure is also if you go through pain. Like if you don't accept the theory of pain, there's no consciousness without pain. Kalian said that. Yani,
And this just boils down to what we were saying. Life is a struggle. You'll
your
pain.
pain. Yani unataka kuniambia tu una losing pesa, una stress, unaenda unaweka ingine. How learn good trade?
Exactly.
Ndaka una lose hata ulali. Lakini mbona lose hivi?
Yeah, exactly. You
Why am I
question
losing?
yourself.
Why am I
Exactly.
If you don't have, I feel like, and I really try to measure the breadth of someone's thinking on that scale, because I feel like very many people I've interacted with have overrated failure. Like hata huku struggle kwa hiyo pursuit yako ya kusucceed
Exactly.
kwanza, hata huku put in effort,
Give up.
and then sasa failure is part of life, guys. We said that. So you've made it acceptable to fail. It's like I really love now what I've been going through from.
Which is a good point. So, with what I'm trying to get out of this, failure is good. We'll all fail at some point in our life. We will embarrass ourselves. It will be a painful experience, what you're talking about. But we should not condone it as part of life. Okay, get my point. Like, yes, we know we'll fail, but don't be too comfortable
Exactly,
failing. Like, don't condone it. It's a normal experience. Everyone is experiencing it.
Exactly.
Like learn it and try and eliminate it.
Make it like, yani make sure wewe na fail ampatani.
Exactly.
Ukipatana
But you know you'll fail. But ampatani.
See ile ati you've made it acceptable to fail.
It's normal.
It's normal. It's part of you.
And it's like making mistakes. You see, like you can't avoid making mistakes, but you can reduce the degree of mistakes you make.
You're making.
You see, like let's say you are in a trade. I like putting examples in terms of trading. Like I have this simple strategy. Let's say I want to take a trade and I'm putting 0.5% risk on it. That is a decision I'm making. I know this trade can fail. You see. But I'm trying to make the decision can be, I don't know the outcome of the decision yet, but I'll try and mitigate the risks in the decision. So that will help me like if the outcome becomes a fail, it will be like a less degree of failure, you see. And I think that's where most traders fail, like in terms of fully coming out of trading. Like you fail 100%. See, like fail in trading 1%, 0.5, 2.
Exactly. But
like fail kidogo. Don't fail at 50%.
But it's normal. It's normal to blow account. But don't worry. Don't worry.
Like
nah.
Some of these things you really have. Like nilikuwa nasoma Ralph Waldo. There's a very good piece of work ameandika about self-reliance. Like his idea is individualism. He says shallow men believe in circumstance and luck, but we strong men believe in cause and effect.
True.
Once you start believing in cause and effect, a failure haikuji. Unajua uliwaka alafu nimefail.
Success.
It's okay.
It didn't just come. It wasn't luck.
Like try to believe in cause and effect. Like when you tu Lawi amesema, if I make some mistakes in my trading, my trading will be sloppy. If I'm careful not to make some mistakes, my trading will be in line. Yes, I'll make some mistakes. But not all mistakes are acceptable. Like
exactly. And Dalius talks about that a lot. There's some things, some mistakes cannot be condoned. Because if you're like a mentor, he was even saying, when you're mentoring people, there's some mistakes they're going to make. You should let them make it so that they can experience it, especially if it's not too costly.
Exactly.
Let them watch you fail. It's like a baby. You'll have to let them walk, wanguke wajue, washike moto so that they can do it hot, not touch. Like let them do it. But there's some mistakes you cannot condone. Like
exactly.
Usifike huko tena. You cannot.
Also there's a.
So I think that's also a mentor comes in and helps you.
There's some things between the two. Just make sure, yani, the point is don't swallow the wrong ideas. Because umeenda mahali umepreachiwa uko failing is okay. Sasa wewe hata ukianza any pursuit unaanza na hiyo idea, I'll fail but it's okay. You know there's a point where you start from like you have failed already. Hata mentality uliingia na it's okay to fail. Hata nikifanya hiki kitu nikifail I'll just learn something.
But they never learn. That's no stories you just say. And that's why now you don't grow.
When I think about it, I'm really learning a lot. It's like what we were saying yesterday in the office. Like if you look at Zikota, you were referring to him. He said, what advice would you have for the losing trader? I tell them to give their money to someone who's superior and stop doing trading.
That's
then Jack was like,
eh?
No, I want you to tell me something serious. Like, don't give me like a joking answer. Like, tell me something serious. Someone is seriously losing and they want to change their trading. What would you tell them? And he told them, I'd still tell them to give their money to superior trader. Yeah, because I believe winners are the only people who transform themselves. Losers don't.
True.
Only a winner's mind can transform himself. So that person is already a winner. As much as he's losing currently, he will transform himself from the losses. But losers keep on losing and losing and losing. They don't transform themselves. They assume losses are as a result of circumstances, like things happening to them. Haoni ni mistakes zao. So a winner can, by definition, be told even before they start. That's what I got from it.
Like a mentality.
Exactly.
The Mamba mentality.
Your thinking yako yenye umekuja nayo to a situation tells me a lot about how far you'll Tackle.
True. How far
And how
you
many
go?
people they join the loser's mind? Ilikuwa bahati mbaya, acha nijaribu tena.
True.
Trading yangu. So there's a fine line between the two lines of schools, between believing in failure as part of the process and failing well and being a loser. You're just a loser, like you're a sucker. I'll put in enough time.
So can you help the loser?
I also believe it's a question of attitude. Like it was outliers. I was looking at outliers. I'm gonna skiz actually Malcolm Gladwell, and I think he's one of the people I also would love to read all of his works now after listening to what he was saying. So he was saying, for you to become an outlier, there are certain constraints. One is poverty. If you come from a poor family, it's very hard for you to be good at something.
It's hard. It's not impossible, but hard.
It's harder, exactly. The other one was attitude. He said, like, winners have a winning attitude. One time mse kama Michael Jordan alikuwa anafikiria ati nikienda hii game naweza lose. It's okay to lose.
It's okay. I get, yeah.
I don't say the moment he started losing, it was an issue.
So he entered as a winner. It's just that circumstance happened.
Bas,
they
lost.
Lose. But he didn't enter with the loser's mentality.
It's okay to lose. I feel like winners, personally, na nataka tu kustudy pole pole, meeting people. Winners have a winner's mindset. Like there's no line between I can fail
in between.
It's I'm pursuing this thing and it's about winning. Like there's a target and I'm going after it and I have to get it, and that's my attitude towards things. I know things can go the other way, but that's my attitude. Siko hivyo 50-50 ati. And angalia kina Steve Jobs, bro. Seven walikuwa wanafanya vitu za hakuwa na hiyo slopiness here. I can fail.
I'm just trying
I'm
it
just
out.
trying. You think you'll commit even to a goal. You won't even commit. That mindset.
Yeah. True.
You won't commit. You'll be like, chatuika. So I think there's a line between the two. That's what I'm trying to say.
Which is a good point.
Yeah.
But mentors help.
So I think now I was still on mentors before we go into discipline. For all, like, just quickly, for let's say I think we know of over 20 great traders, hedge fund managers, Ray Dalio, PTJ, Howard Marks, all of them, Stanley Druckenmiller. What do you think from all these mentors? You've of course you picked a thing or two from them. What stand out? Like what one to three things that really stand out across the board for all of them?
All this.
Start. Am I want us to start?
For me, if I start, I think but I think this will enter us into that topic of discipline.
Okay. So we can now tackle this and move to the next one. Yeah.
So I think what I realized cuts across the board is the factor of discipline. Like none of them is none of them has room for sloppy decision making.
Exactly.
So like the fact that you have to be disciplined always, because most of them have made wealth, and now their main struggle is keeping that wealth. See,
which is not an easy feat.
Exactly. I think
And
it's harder. I think it's harder
to maintain wealth.
Yeah, to maintain $100 billion than to make it.
That's
true. Maintaining, and even from one accounts, like maintaining your winners. Unashanga winners zangu zilienda wapi? I had some winners, but I can't see them in my account. You see, because like losing your wins is so easy. So you have to have a very, very disciplined approach into how you preserve your capital. So most of them are like it comes down to decision making. Like they have very, very systematic ways of decision making. Like Ray Dalio believes in systematic decision making, not just emotions. We believe Dogecoin is going there. Tesla is
in his all work. He's eliminated emotion process. Everything
systematic decision making, and that boils down to like systematic decision making. Like inanga room for. Let me be in discipline this time. You see, let me break this rule. There's no room for that. So that fact of discipline really stands out across all the people who have mentored me in trading. Like all of them. None of them. Like and the people who broke a rule, Jesse Livermore, because Jesse Livermore was one of my greatest mentors. But his sides of like his losing, like how he'd lose money.
Yeah,
how he'd lose money was something. I wouldn't want to pick that from him.
So you learned what not to do.
I learned what not to do from also these mentors. So, and for him, it was basically a matter of breaking his own rules, and he knew it. He knew I have very, very strict rules, about 13 of them. But at a point, unapata ali lose $3 million because he broke a certain rule. You see, so like rules trading boils down to rule-based decision making. It doesn't have to be 100% like fixated, but there's only like
be perfect.
Small room for tweaking the scenarios, the different scenarios.
We say about sports. There's no room for if you lack discipline to go work out, go to the gym.
Exactly,
my friend,
exactly.
That thing will cost you. And
heavily.
Just entering to the point, like what Jim Brown says, we all must suffer two pains: the pain of suffering, the pain of discipline, and the pain of regret. The only difference is that the pain of discipline weighs ounces. The pain of regret weighs ounces, tons. So if you're disciplined, like just look, like same thing we're talking about sports, working out. If you're disciplined enough to go to the gym, my friend, it's painful. It's not easy. That consistency, going there, being pushed by the trainer, it's painful.
You have another form coming and you still have to focus on this going to the gym.
Exactly. Like you have no, it's painful. It's painful mentally, physically. But once you finish, imagine after eating a whole pizza and eating a whole pizza kwanza, a whole large, and finishing working out. When you're working out, it's painful. When you're eating this thing, it's pleasure. When you finish here, you're like, this is the best day. When you finish here, you're like, oh my God, what have I just done? I need to start looking for a gym.
Yeah, true. And I think, let me just like add on your point, Kiasi too. And this comes down to today morning, like in terms of discipline and like your routine. The trades I said I had today morning, the GJ and GGU. Bro, I slept at like 12.
12 a.m.
Yeah, 12 a.m. I had to be up at like around 3. Bro, at 3 my eyes were heavy. And I knew, like, by the time I went to sleep, I saw some opportunities, but they had not formed a signal yet.
Yeah.
So I knew, let me wake up around 3:30 to check on it. Yeah.
Candles have closed.
Yeah. So like the alarm rang. First time. I was just about to
let it go.
Let it go.
Yeah.
If I had let that alarm go and turn it off, I'd have missed the 3% I made today morning. See,
which is a lot.
A lot.
And it's what we're talking about. The cost of missing is
missing
worse.
a trade. So the fact that let me be disciplined about my trading routine, wake up. If there's no trade, it won't take me more than 20 minutes to go back to bed.
Exactly. So Tarudi
to bed. So I woke up at 3:30, checked the trades. They were very, very perfect, entered, and went back to sleep. So I think the fact that if I was not disciplined, let's say, let me just sleep. My friend, that 3% ingekuwa. The fact that I was waiting for an entry. Not that I didn't have, like I had like I always when markets open, I always have like potential trade ideas. I'm a potential trade that can come up during the day. So I had those two. And if let's say I just woke up at 5, that trade I would already have missed it. You see.
So even if you're not disciplined with the time, miss.
Exactly. So the timing also, like you have to be very, very disciplined about how you do things, especially in trading. That room for sloppiness really, really affects your performance.
And it's what Jordan Peterson says: discipline is self-imposed slavery.
Yeah,
self-discipline.
Yeah,
so
self-discipline.
doing that, you're a slave to your routine.
Yeah, man.
And if you don't follow it, my friend, you won't perform.
And you're saying, like the moment 10:30 came and my TP was hit, it was just eating that large pizza. You see, as you're saying, like from the gym, that just linking the two.
So it was worth it. You waking up.
Yeah, it was worth it. Yeah, it was worth it. So. Believe discipline. Like you can't be a good trader without being disciplined.
Ken, what do you think of discipline?
That's a hard topic. Kwani tumeruka tunaongelea 3 things.
On discipline.
No, we're talking about 3 things that
discipline was one. Discipline was one.
Yeah.
Yeah. Okay. So for me, another thing was resilience. I don't think from any of those people there's anyone who had it on a silver platter. Like who just started managing that $10 billion. Like Ray Dalio started out with a team. Let's say we are 3 people here. Caleb, you are our leader. Next year, Ken quits. The other year, he quits.
You remain alone.
Then you lose money alone. Then now you need to go back into seeking capital. So resilience, and we've said this here a lot of times, is that trading it's a like time. I think for most people, that's why I am to the age of 10 years. Because like we've heard from most success stories, it took 10 years, more than 10 years for things to make sense. Maybe like some and things to make sense is the moment you're managing good capital, and good capital is not $1,000, $10,000. Good capital is $1 million. Like ukishafika hiyo level, you're managing $10 million. Now things start making sense to you. Like the pain was really, really worth it. You see, so resilience in terms of trading is something I've picked up from most of all those mentors. Like who was it that lost we were talking with you, Ken, yesterday, the guy who lost he lost everything and just remained with a Porsche, then went to
Shapiro.
Yeah, Shapiro.
That's market wizard.
Yeah, market wizard.
Remember.
So you see, like, you lose everything, bro. Like you're already rich. You see, you're owning a Porsche, bro.
I was telling Lawi, you imagine now we ping you could G class. Alafu narudi kupanda mat.
Afu narudi kupanda mat, bro.
Sasa nacho kijana.
Mancho ni nini? You're back to matatu.
Account yako bro imerudi zero. The only thing you've left is the Porsche.
Mimi niko na nguvu haki.
Hiyo kitu ni resilience, bro. And you still come back to what made you lose that. Like Jesse Livermore, after losing $3 million, coming back into markets, paying all back his debts and making $100 million. Shit nitaka resilience, bro. Like
it's no lies.
Like if you can't take time to embrace the pain, go through the pain, because I think like the outcome of this pain will be pleasure, as you said. So if you don't want to go through the pain, don't expect pleasure. Yeah, so it doesn't work like that. So go through the pain, be resilient. Also in trading, it's tough because it's a business, like, and I was telling Ken yesterday also this, like, trading for a living. I think we had this podcast, trading for a living. That shit is hard because trading is like your main business.
We've not even talked about it.
You've not?
We have just mentioned it in some episodes.
Oh yeah.
You didn't?
Yep.
Coming up.
Yeah. So trading for a living, that thing is hard. Like trading needs you to give it, like, let's say 90% of its like of your time to it as you're developing yourself.
Exactly.
And that 90% you're not earning. You see, actually losing, making mistakes.
Yeah.
So like that thing, and I think that's where most people quit. The fact that you don't have anything else to sustain you in your, like, as you lose money in trading, as you learn yourself, as you find how to analyze markets, how markets work. That's where like you need like double resilience now. You see, because see it too about like a matter of time. There's no money also. So in a capitalistic world, me say end up karanjani mshow ati please give me milk. You see, like you can't live on debt always.
It's hard to perform when you're like that.
Exactly. You're on debt. You want to perform. You want to make rational decisions. That's where you'll find like you have a $500 account and you want to make your rent there. You want to make your food. So
and to add on that, it's a good point because it's like what you remember what you're saying in terms of from outliers. In order to perform well and to achieve 10,000 hours, like what you're saying, you need to put 90% of your time to it to become very good. And you remember, to put 10,000 hours in a certain craft, one of the most important thing he talked about in Outliers is having a support system. And I believe that's what us were trying to offer at Financial Hub. Because he said, one, what you said, if you're poor, it's very hard for you to perform. Like, you can't be...
Yeah. And also, if you're extremely rich, there's also a disadvantage. For example, if my dad had $1 billion, there's a high chance I wouldn't be here with you guys.
That's
but
true.
maybe you'd also be...
But I wouldn't be an elite, an outlier. Unajua outlier ni ule
Allah stands
performance
out.
yangu.
Big.
You nipe 5 years one.
Yeah. So
like
in terms...
Also, if you need to have the right amount of wealth and exposure, but not so much wealth to make you complacent. That was the point. Like, you need to have wealth that makes you comfortable for you to work on your craft, but you can't be complacent. Yeah, that was the point. Like, the balance between the two is also critical.
So the poverty one, like what you're saying, you want
Can't
to perform well, and at night you have a headache, you don't know where to sleep,
hungry stomach.
you're hungry, and next day you think you'll wake up
To
and
wake up at
perform.
3 a.m. to look for that trade.
You cannot. So one of the things was support system, which offers that. There's that poverty. Financial system is what support.
System.
Support system is like what us we're trying to build with Financial Hub. I believe is a support system for traders where you come and get education, you get mentorship, you get funding.
Capital, yeah.
So you don't go looking for that anywhere else. All of it is in one place.
In-house.
So building that support system, if you don't have it. So you gave the examples of who? Kina Bill Gates, Mozart. Those guys, Mozart was from a good family. They were well off. So he could go for trainings, he could go and play music. So during that whole process, he was learning how to become a professional, like a master at his craft. But if you don't have those things,
True.
my friend, you're going to struggle. So just adding
Like
on that
odds,
point.
like the odds are not favored to your side. Yeah. Skid
It's
against you.
unfortunate, but it is what it is.
So that point was on resilience.
I think just you have another one.
I can continue there. Maybe
I
just
think to answer your question, maybe one that I'll have is these traders, all of them, these big traders, none of them ever doubted themselves.
True confidence.
There's no one who ever said, like what Ken was saying, I'm just trying it out. If I become great, then luck was on my side.
True.
This
True.
guy is
Even those
new.
people who stumbled upon it. Yeah, true.
That's when you'll get nowhere.
Even those people who stumbled upon it, they were easily glued into it so fast. Maybe like the passion was not there. He was maybe into other things. Then he just got into trading and got glued, got stuck.
Put in the work.
Yeah, like the guy we were talking about last on the previous episode, Jim Simons.
Yeah.
He didn't know so much about markets. He was a professional mathematician, a professor. But the moment he just came into markets and made a few trades, he didn't even become like good at it, but he was stuck to it, and he was so sure that this is where now I'll make my riches, my wealth. And he decided to take that path confidently, like leaving your academia job to become a speculator is something most people didn't believe that time could happen. Especially for the greatest mathematician in US at that time. It was something very but he was so sure in markets, I'll go here and I'll win. Not that let me go and try this. If it doesn't work, I'll go back to math. He was so sure it has to work. So as you're saying, like surety or confidence.
It's especially if you're putting in the work, like diligently, day in, day out, you can be 100% confident that one way or another, even if it'll take me how many years, I'm going to make it. So I think that stood out more. If you read Market Wizards, if you listen to stories, what you're saying, Jim Simons, Ray Dalio, PTJ, those guys, they put in the work, and it's like Buffett. Buffett is made his wealth past 50, most of it. Compounding. This guy knew. He wasn't guessing. He knew when he started compound. That's what he preaches. Compound interest. This thing will grow massively. The guy now is what? $100 billion plus.
I think 100 plus.
It's 100 plus. So So for me,
I think trading doesn't allow you to have that like unsurety. Like even for you, for me and Ken, we are here because we believe 100% sure our trading will work in a few in a few years coming. So like the moment you have like that doubt, that uncertainty, it's so easy for you to leap into the other side, like into the like something else outside trading. But the fact that now trading is my everything, you'll have to make yourself sure about it. Hakunanga sasa ile if this kwanza the moment umejipea tu if you'll go to that
if is not a good vocabulary by the way to have.
You'll end up going to that side of if because trading is hard. Like the moment, like before you solidify everything, you'll have jumped into another bandwagon. So I believe, as you're saying, like that factor of being so sure that I'll be good at this is what actually made them successful.
It did. It's like self-imposed prophecy.
Yeah, true.
Self-fulfilled, prophecy.
True.
You say, "Me, I'll make it," and you actually make it.
You have to tooth and nail. It has to work.
Tooth and nail.
You'll push it, bro.
Who made that thing? Tooth and nail.
Tooth
They
and
don't
nail.
go together. If you think of it, tooth and anyway, let's not go there.
Anyway, Ken.
For me, I think one thing that stands out was what Caleb said, but now I'll have to turn to the other two.
I was thinking the same.
Yeah, that one, like, if you read Soros considered
George
himself
Soros.
amesaya. Unajua mtu anajiita mesaya. Ushaiona mtu anajiamini hivyo? Ama Nietzsche, like ama Jordan. Mimi kwanza nimestudy hawa winners. Hata unaibika kwanza wewe mwenyewe. Unaona yenyewe sijiamini venye. I feel like you really have to believe
that ego
in
comes in. You see that winning ego. Yes, it's not overtaking you,
to confuse
but you have
that to
an ego
arrogance. Exactly.
I'm good at it. You see, I'm good at this. It's not bad ego. Kuna good ego, but which is good. So I was kind of saying, continue.
So, like, you really need to have that self-fulfilling dynamic. Like, I'll be great at this. And from that, you can commit to it. You can go through. Like, once you have that belief, it's easy for you to come back from setbacks. It's easy for you. Like, I would have spent 11 months whining about a certain failure and like itakuwa very easy for you to bounce back. So I really believe in that. Akina Steve Jobs alikuwa na any room for failure. Any room. Like it was, I really believe in myself and I'm going to pursue it with that. So there's that self-fulfilling dynamic. I think that's one. From all the great people I've met, I think that is one of the things that really stands out. Another thing that stands out from me is work ethic. I think most of these people are very disciplined, very aggressive, very concentrated on details. Like, it was a matter of being good at something. It was not even the pursuit of cash. It was the pursuit of being extremely good at a certain skill and perfecting it. Like Dalio, I'm perfect to manage a team of people. I'm perfect to understand how markets work. That is his niche. Nah, I'm focus up on I get everything right. Or like Buffett says, understand your circle of competence and be extremely good at it. Don't rush everywhere. Just become good at some things and then you can go forward. So I think there's that element also of becoming extremely good at something. Like most of these people were skilled at something. The only reason Zuckerberg is the one of Facebook is because he was the only one who could program at Harvard at that time. It was not even his idea. But the fact that he was the only one who could program.
Yeah, the twins had to go for him.
Yeah, meant he had to like
be skilled at what he's doing.
Exactly. So I believe becoming skilled at what you're doing.
Have you seen a man skilled at his labor? He will dine with kings and not obscure men.
Exactly.
I quote.
That's what it means. Yeah, you become extremely good at what you're doing.
Yeah,
that's one of the things that I think I have picked up from some of these people. And when it comes to the trading scene, I think also focus on managing risk.
Yeah, actually that was my next point, what Kenan said.
So
we'll agree on that.
On managing risk.
All of them.
I don't think there's any great trader who does not understand risk and has tight limits for ensuring some certain things don't happen.
That one, they have no room for mistake.
Exactly.
When it comes to risk.
Ndo ile umeperfect. I can't lose just nime lose to even. That should not happen. It's an abomination. Like I don't know. So you really need to focus on managing risk. It comes for you as a trader.
I think risk you should work on it to perfection.
Yeah,
you know, true. Like the system cannot be perfect, but risk
can be perfect.
Man, that one you need to. There's no.
Yeah, true.
It's very hard. So I think also from a trading perspective, I think that is very, very, very important, paramount. And unfortunately, many newbies spend much more time
on
psychology, on entries and exits, chat work. Hawataki hata kujua nikiwa na $10,000 nita trade aje ni make sure sijawahi lose.
Because you know they spend more time on entries than on exits.
Exactly.
Like finding a good entry and they never find exit. Look at investments. People enter crypto nini? Hey, coming out.
Exactly.
It's a problem. So I get your point.
There's that element of
and
on risk. That's a good one.
Let me echo it for you. Vantap,
yeah. Me as a trader, someone I can say.
I think also Howard Marks has done a great job.
Great job on risk.
This I've not not that he's written or what, but his philosophies around risk. I've not really gone deep into them, but after watching his video, Steve Schwarzman, he talks. Hey, that guy. He's number one on finance. He's 33 billion.
Well,
if you're not talking, if you take Warren Buffett, him is diversified. But when it comes to finance, the number one person is Steve Schwarzman. And that guy says risk. There's no room for playing around with risk. That one. Yeah. So I've noted. I'll go deep into it. Then I'll share later on.
I'll go also deep into him.
Yeah, he talks about risk a lot.
Yeah, so I think OneTap did a very, very good job in highlighting to us how a simple concept like position sizing is so misunderstood and flawed.
Exactly.
Yeah, like most people, even great traders, don't understand position sizing well. So also Howard Marks did a very, very good job in teaching us risk management. Basically just understanding what risk actually is. I think that's where most new traders fail. They don't understand risk, and there's that risk of not understanding that risk. So I think understanding risk is where I always preach that, like to traders, and I always tell people you can't understand risk if you're framing it to anything under $100,000. You need to frame it in that. No matter like the people insisting on risk, ni kina Ray Dalio na kina Howard Marks. The people focusing on chart work is everyone under $50,000.
Good point. Good point.
So like if you see like the extent of how these hedge fund managers like talk about risk, it's because for them a 1% risk of Redalio, 160 billion. That is $1.6 billion already at risk.
There's no room.
You want to put $1.6 at a suboptimal trade, suboptimal investment? You can't. Dollars.
Yeah.
Hey, my friend.
But if you look into the works of Dalio, he talks a lot about risk. Especially that's how he's created most of his products, like the alpha, the pure alpha. Those things, the all weather, they came as a problem. People coming to him asking him, Dalio, I want to create a portfolio which has very little risk and high returns. And that's how he was able to create the pure alpha.
Oh, the different structures of
exactly.
the funds.
So this guy is looking deeply into risk, helps them. It helps. It gives you more ideas of how you can perform better. And the rewards are better. You get more money. Because look at, let's say, me and you, what we keep talking about, risk-adjusted returns. Let's say me and you have a fund. Me, I'm risking 20% to make 20%. You're risking 5% to make 20%. I'd rather give my money to you than people to bring it to me.
Even for me, if I'm risking 5% to make 10, and you're risking 20 to make 20, who would you go for?
Go for the 10.
Go for the 10.
This guy is risking too much to make the same amount of it. That's 1:1. Does not make sense. But anyway, I'm just adding on your point of risk.
Yeah, so that was Ken's point actually.
Ken.
Risk management cuts across the board. I think now we can highlight them. We said discipline, resilience, like
no self-doubt.
Believing in yourself.
If
you don't believe
Can
in
you
yourself.
believe in yourself? Taras, do you believe in yourself?
It has to work. It has to work and work, man. So
that belief, I think it's what can help you reach great heights.
If you don't have it, always commit. You can't be a winner, and that's the point. You can't win.
You can't go through dark times.
You can't win. And I see it, like even I was reading the Unknown Market Wizards book, and one of the things that stood out to me was most traders were saying the reason many people don't wait for the right trade, the reason many people are very, very scared of missing out on trades, the reason many people end up making emotional decisions is because they don't have conviction in their system.
Okay.
You don't even believe in it.
Exactly.
You're just hoping. You're in a trade.
But in trading, but it's not about actually mostly believing in yourself. It's about believing in your system.
Exactly, because you're in a trade. You don't even know where you're in a trade, but you're hoping it will work.
Yeah.
If you're trading from that point,
you're on a journey
because you still need to develop a system and then have the conviction to trade that system.
True.
And you can't develop that conviction without believing in that system. And you can't believe in that system without believing in yourself.
True.
So for me, the most important one actually among the 5 is that one.
Believe.
I feel like
believe
if you
in
believe in yourself, all these other things can easily come. It's easier for you to become resilient. It's easier for you to commit. It's easier for you to... But if you don't believe in yourself,
True.
hey, Tapambana.
So what about discipline, guys?
Tapambana.
So on discipline, I think we've also highlighted.
But
a few
we've
points
highlighted
on
a
that.
few points.
Yeah.
So I think for me, one, many people come to the office and they ask, okay, how do you maintain discipline or how do you handle losses? And one thing I've observed is there are certain mental states which are likely to lead to lapses in discipline.
To lead to?
Lapses in discipline. Like you throw away your rules and you don't focus on following your rules. And some of these mental states are, one, frustration from losing. So you have followed the right process. You know, if you don't get the joke in trading, you'll follow the right process and lose. And then you feel bad. But if you get the joke, you'll follow the right process, lose, and then follow the right process again, lose, and then follow the right process and make time 3 times what you've lost.
Yeah.
But now for the newbie, he assumes that because he's lost, the market owes him something. And this frustration normally leads you to trade from a point of revenge, trade from a point where you don't follow rules, throw away your position sizing rules. If you just keep track of your trading and you're trading a live account, trust me, most lapses in discipline will come from either too much pain or too much winning. Both are dangerous. The flip side is you start trading, you follow your rules, and you start making money. After you start making money, you assume I'm a king. And then what happens? You start taking suboptimal trades. So instead now of focusing on following certain rules and trading certain processes, you now start bringing in some trades which have not met your whole criteria. Like umeanza kuchukua trade haija form signal, umeanza kuchukua trade haija line up na top down approach, umeanza kuchukua trade haina a good risk reward ratio. If you can eliminate these two extreme emotions from your trading, too much euphoria and too much pain when you're losing, and focus on trying to maintain yourself in a rational, calm state when you're trading, it's easier for you to maintain your discipline. You won't lose your discipline because of any other thing. Often it will come from those lapses in emotions. And I'm talking from a point of experience. Like the moments where I've lost most cash is when I started losing and then I started not following my rules. So when I lose, then I start trading opinions. Sasa hii itarudi hapa. Sasa hii sasa hii ilikuwa stop hunt. Let me go back. The moment you start doing those, and they happen unconsciously, those are unconscious behaviors. Like if you're not keen on observing them, they just happen to you and you're not keen. Right. But if you're keen, you'll observe that, hey, after I lose, there's a certain feeling that nataka hata watch markets more. It's like they own me something.
Yeah, true.
If you can't eliminate such things completely from your trading,
Tricky.
It will take you some time before you can become good at it. Yeah, so that is one of the things that I'd say about discipline. Like focus on ensuring your mental state doesn't drift far away from making too much money or losing money. Ensure none of these things affect you. True. And the only way you can do that is detaching from the money and focusing on the process of trading.
Actually, that was now my next point. Like the only way also you can, because the money factor, that shit, like breaking your mind from the money factor is hard.
Yeah.
So like, and we always preach detach. That detachment is hard.
Very hard.
Because that's your job, to make money there.
Yeah.
But the money, like your job is to make money, but as an outcome, as an end process. So like, not that you make money by you buying and selling teke.
Exactly.
You make money by following a process.
A system.
So if you don't detach from that, hey, it trade my win will go.
FOMO, win yangu itapota. You can't even hold a trade.
Exactly. So you're not following a stringent process. I think trading, for it to detach from the money, it has to like try so much and not even have that monetarily goal. Yeah. Your goal should be
developing
to follow
skills.
That
process.
criteria and process you've developed over the years. Because I believe trading is something you develop over the years. And it's so painful for you to break a rule you've developed. So for me, over 5 years of trading, and I still break some rules I did in my first account.
Yeah, see,
hiyo sasa ni weaknesses zako zenye most likely ukiangalia root cause ni you are attached to the money. You wanted this trade to be right. This trade moja tu, si hata a series of trades.
One trade
imekusumbua akili mbaya sana, because ukiona tu hiyo red hapo kwanza, you're not thinking straight. Anxiety, fear. So the moment you are trading from that mental state, as Ken is saying, it will be so hard for you to make rational decisions. And trading 100% needs rationality.
Yep.
Like rational, and don't rationalize bad things also.
Kuna rationalizing.
Kuna rationalizing losses.
Nilitoka hii trade juu. Niliona. Huoni pimba hapa.
Nikanitoa.
Pimba ilinishtua.
Actually your mind can play tricks.
Hapo miss out on opportunity. Then you're like, unajua.
You won't get
like what fit. You can't get all the trade.
Telling yourself wrong stuff.
Exactly.
Wrong stories.
So
You're justifying it with
your own ideas.
Misinformed stuff.
Yep.
It's justified.
Yeah, so trading actually for me, I think it's more of a process than an outcome. It's more of following that process always.
Yeah.
If you do something, do it consistently. In 100 trades sasa ndo kuja sasa uangalia sasa feedback sasa. Siangalie feedback in 10 trades.
Yo, hakuna feedback.
Piga kwanza 3-6 months of trading kwanza. Kwanza hapo kwa randomness ni mbaya sana. Randomness kwa results in
Randomness
trading.
ile results inakufanya unaanza kuchukua bigger position sizes.
You want to recover so fast ukidhaniani market inaenda sijui wapi.
So that one is one of the things
like having a systematic approach to how you approach trading, like in terms of the setups you take, the markets you watch, the market environments you perform
trade.
best. Also like your own philosophies, you see, because in trading by the way, if you don't have good philosophies,
and that's
of
one
your
thing I
own
think
also,
that we can also talk about, like you are saying, among the common things I've observed among the successful people, no one is like the other man.
Yeah, true.
Also gonna beliefs zao different na zingine zina contradict,
and they're all successful.
100%. Yeah. Like
they
are successful contrarian traders.
Exactly.
Successful trend traders.
Following traders. They're successful traders who believe in
They are
trading
successful fundamentals.
technicals. Kama una philosophy zako, kwanza kama una principles zako.
There's Jim Simons who believes maths ndio inaweza beat markets. Huko hivi Daniel believes psychology and risk and market research.
Form your own principles.
Yeah, so
and to help you develop discipline also, I think you can develop trading rules.
Exactly. So
I
that
think
shows.
rules confine you to behaving in a certain way in the markets, and it's easier to track when you're breaking a rule than to just assume that you're missing out on discipline. Because also, like one thing I really like about our job is we get to meet with people who are trying out in trading, and they come to us because they have a problem. So the good thing, and this is a good thing, we meet with losers, not winners. So people who come to us are losing in the market, they are not winning. And I try to understand, okay, how does this person think about markets? What are his beliefs? What is interfering with his making money? And one thing I've realized is many people don't understand that trading is an upswing against human nature. Everyone comes in the office complaining about losing discipline, hoping in the market, not having a process, psychology being difficult. But if you dig deep into these things and try to understand what's really happening, you'll find there's a root problem. One of them, okay, tell me your methodology. 85% don't have a methodology that is consistent. They just trade their opinions. They scan a chart and they try to identify a level where they can buy and sell. And it's not a consistent thing. So they just trade their biases. Today I feel like USD card will go up, so I'm trading it. Tomorrow I'm feeling like Aussie dollar will go down, so I'm trading it.
People have two systems.
Like I switch from day trading to swing trading. So
Not even that, like totally different systems. I won't mention them,
ICT and CG something else.
Yeah.
So
ICT here, okay, maybe all weather here and a robot there.
exactly.
You see?
You're trading any. That's one problem. You get? That is one. You don't have a working methodology. You're a loser. Na nimeobserve si mmoja, utakuja wengi traders. Okay, nieleze how you trade. They don't have a stringent process of trading. They don't have patterns that they trade consistently. So that is one. The second thing, okay, you have a system at least and it looks like it's working. Why are you not making money? The thing is, they don't know how to manage risk.
For that point. Another thing is objectives. They have very, very weird objectives in trading. Like someone has $1,000 and he wants to make money.
Not even learn how to trade.
Your objective was as you come with this 100,000 shillings is wrong.
Exactly.
You don't want to that amount of money. It's for you to learn.
Make money.
Your main objective will be here. Hey, Taras, I have this amount of money and I want to learn.
Exactly.
Not that I want to make at least 10%. Forget about that 10% first.
10% outamake.
Achana
nayo kwanza. Focus on understanding hii game. Go exposed to markets. Like let's say even you're building your psychology. You get? I'm ticking, like anytime we do an interview with someone or we sit with people, I'm just ticking these boxes. Like these are losers now, so wanafanya these things repeatedly. So losers have these patterns. Another thing I hear people complaining is, hey, nikilose bana, hey, siwezangu kufikiria tena on silali hata nikichukua trade. Anajua tu kwanza huyu sasa, huyu hata kuna shida mingi kabisa juu. Bado hata hajaelewa the trading process. Hajaelewa yani there is a system you should follow. Losing should not affect you just like winning should not. Another thing is people ask you, hey, na ile pesa mingi kabisa ushaishinda kwa hii kitu ni how much? Like you tell someone I made $1,000 in a day. Ama kitu hey, so ulitoa ukenda ukafanya. Okay, even the average trader anafikiria. Like you just tick boxes. And you can group losers and group winners. And one of the things I've learned is human nature. Like losers work on the same patterns. They are hoping in the market. They don't have a methodology. They're looking for blames. None of them is interested in changing themselves. Like I think 1 or 2 people pekendo washai kuja kaniambia I'm working on myself. Wengine wote inakuwa anatafuta system, strategy. Itanibekea pesa. None of them is focused on risk. Hakuna mse ashai kuja hapo akaniuliza how do you manage risk on this account? None. Wanuzanga tu how where do you buy? Where do you buy? Where is this market going? So if you really want to become a good trader, I'd also advise you spend some time with losers. Once you understand what losers do, you can do the opposite. So you need to be smart around how you learn. Like learn from winners and also learn from losers. Unaona kumbe as we lose hata ukijob kesho.
But now you have to be conscious to know who the losers are.
You know losers. The good thing is you can easily tell someone who's losing in trading.
You know, that's the thing about trading. It gives you immediate feedback. Unajua sema ngati ama winner na wewe loser.
Hata ule confidence ya kuongea mbele yake. If you understand your game, if you understand what really needs to be done, you have the confidence. People who don't, they are fishy. They are not straight. They don't have clear answers to some questions. They don't have philosophies. They don't have strong philosophies that they believe in. Like how do you handle entries? How do you handle exits? How do you handle risk? The reason, the minute I want is easy to clearly defined. Akokanga tuko yo group ya losers, then I tell everything all the reasons why you're losing. I pick them, group them in my category of losing traders because I'm building that framework. Then I just do the opposite. I keep on doing the opposite. It's like that trade I took. You remember? In the office.
Which one?
When I was short and that guy came to the office and he was long.
Oh yeah, I remember.
And then I asked him, why are you long this market? What did he say? He said something, this is how the people who are trading this market are trading. And immediately I went short and I made money on that, right? So I believe there's a common pattern to losing traders and there's a common pattern to winning traders. On the flip side, I think winning traders have a working methodology and they're strictly following it. Like in the process yangu, and I'm strict in following it. They have a risk management framework in play. Like they are really keen on not going to certain drawdowns, not losing certain amounts. They're very good at managing their mental game. So there are stark differences between the two. Knowing where you belong and working on yourself to move to the other side is something that is very, very important. Yep. So I think we can stop.
So I think we've talked extensively on mentors. We'd also love to hear your mentors down on the comment section on the YouTube page. So share your mentors. If we've also mentored you, can also share that. So I think it's been a very, very good session. We've talked extensively. I think the time is over. So until next time, enjoy the session. Enjoy I think 2 hours, right? Yeah, 1 hour, about 40 minutes. So of content, pure content, I think. It will help someone, share it with a friend, share it with a trader. So let's continue building the industry one trade at a time and trade well.